What if I told you that the very thing keeping most beginners away from investing in stocks is not lack of money, not lack of education, but the invisible fear of making the wrong move? The fear that one wrong click can wipe out their savings overnight. And yet, the truth is that the stock market, when approached with patience and a little street-smart thinking, is not this mysterious casino people imagine, but rather a giant marketplace where ordinary people quietly build fortunes. Not by luck, but by learning the simple patterns of human behavior hidden behind numbers on a screen. So let me take you into a story that most channels don't tell. The stock market is less about charts and complicated jargon, and more about understanding why people buy when they're excited and sell when they're scared. And once you see that psychology driving the trades, you realize investing for beginners is less about trying to predict the future and more about building habits that protect you from your own impulses. Because here's the thing. Every successful investor you've heard of, from Warren Buffett to the quiet guy in your neighborhood who retired early, they all started as beginners too, confused, broke, uncertain, and yet they realized one principle. Your first stock should never be about making money fast. It should be about learning how you react when money moves up and down on a screen, because if you can control your emotions there, you can control your future wealth. So let's make this practical. Imagine you have $500. Not much, right? Maybe the price of a new phone. But instead of blowing it on gadgets, you put it into a simple ETF, like an S&P 500 index fund, and you watch it grow over months, slowly, boringly. Yet that boring growth is exactly how millionaires are made. Not through chasing, hot tips, but through consistency. And here's a secret no one tells beginners. The first rule is not, which stock should I buy, but how much am I willing to lose without losing sleep? Because the moment you tie your survival money into stocks, you're already setting yourself up for panic selling. And panic selling is the fastest way to destroy years of gains in seconds. So step 1, only invest money you don't immediately need. Step 2, start small. Learn how the market breathes. Watch it fall and rise without reacting. Because the biggest hidden lesson is that you are not really investing in Apple or Tesla or Microsoft. You're investing in your own ability to sit still while the market tests your nerves. And I'll give you a tip that rarely makes it to mainstream beginner guides. Before buying any stock, ask yourself one strange question. If this stock price went down 50% tomorrow, would I still want to own this company? Because if the answer is no, you're speculating, not investing. And speculation is like fire. It looks beautiful, it feels exciting, but it burns you fast. Whereas real investing feels slow, dull, even frustrating. But 5 years later, you're glad you stuck with it. And here's a mindset hack for beginners. Stop checking your portfolio every hour. Treat it like a seed you planted. Would you keep digging it up to see if it's growing? No, you water it, you protect it, you forget about it. That's how compound growth works, quietly in the background. And if you're thinking, but isn't this too slow? Shouldn't I be chasing the next big thing? Remember this? Most people lose money not because they pick bad stocks, but because they try to get rich fast. And fast money is emotional money. It disappears. So as a beginner, your edge is not speed, it's discipline. And if you make discipline your habit from the start, you're already ahead of 90% of people who come into the market looking for shortcuts. And here's the final truth. Investing in stocks for beginners is not about finding some magic formula. It's about training your brain to think long-term while everyone else thinks short-term. It's about building systems that remove your emotions, setting up automatic investments, treating every dip as a discount, and reminding yourself that the market has one pattern across centuries. It falls, it rises, and it rewards those who stay patient. So if you're starting today, remember this one line. Your first goal is not to beat the market. Your first goal is to not beat yourself. Because once you master that, the profits take care of themselves. And while others quit at the first sign of red, you'll be the one quietly smiling years later, holding on to wealth that felt impossible when you first began, because the stock market is not for the smartest, it's for the most patient.